Hello, my name is Marty Foreman. I'm a state specialist with Ag Business and Policy at the University of Missouri Extension. Today I want to discuss the September Grain Stocks report. This report was released on September 30th for grain stocks as of September 1st. So the stocks numbers came in lower than expected for both corn and soybeans. So keep in mind that the September 1 stocks estimates for both corn and soybeans become the ending stocks figures that the USDA will report in their WASDE supply and demand tables. So USDA will plug these stocks numbers into the balance sheet when they release the next WASDE update, I believe on October 9th is the next WASDE report. When it will be released. So both of these numbers came in lower than expected. And as a result of that, we expect pretty significant revisions to corn use in the feed and residual use category for both, particularly for the old crop or the 2019/20 marketing year, and then possibly some slight upward revisions to the new crop as well. So we have implications from the report for the new crop supply and demand, as well as the price outlook. September 1 corn stocks came in just under 2 billion bushels. You can see at the top of the bars there on the far right for 2020 officially came in at 1.995 billion bushels. That's down 10% from a year ago. The significance is that it really came in well below what the trade was expecting, about 250 plus million bushels below what the trade was thinking ahead of the report. And also trade was thinking that USDA wouldn't make much of a revision from what they were using on their supply and demand table from earlier in September. So also about a 250 million plus change from what the USDA was using on their previous balance sheet. So the sharp deviation from trade expectation was really driven mostly by a revision to the June 1 stocks number. So they made a pretty significant downward adjustment to June 1 corn stocks, which carried through to lower September 1 stocks as well. On-farm stocks for corn accounted for 38% of total stocks. That's well above the 10-year average of 33% for September 1 held by farmers on farm, and it suggests farmers held a little larger than normal proportion of the 2019 inventory and carried it over into the new marketing year. Based on this change in stocks from June 1 to September 1 and accounting for a slight amount of imports of corn into the U.S., corn disappearance for the summer period totaled just over 3 billion bushels, 3.033 billion bushels, and that's a 1% increase from that same summer quarter a year ago. So we expect as a result of this that we'll see USDA boost their feed use for the 2019-20 marketing year, probably by about 260 million bushels. So probably go from something like 5.6 billion projections for the feed for the old crop feed and residual use, probably up now to something closer to 5.86 billion bushels. And then with that increase in the old crop, we'll probably see a slight increase in terms of the year-over-year projection for the new crop feed and residual use as well. That's what I would expect to see. As far as the price outlook, we've seen corn prices move up pretty sharply from those lows back in August. We're holding in a pretty broad range there between about 320 and just over 360. And then in September, we pushed through that 360 area and got all the way up to close to 380, pulled back to the 360 mark. And then with sharply higher price response to this report, we saw prices push to a new high for this move and retesting that previous high in September and moving to the highest level for the December contract, at least since back in early part of March. So a pretty strong price response to this report. I suspect that we'll probably see the prices hold this 360 area and then follow through to the upside from here. Will probably depend on what USD does with the production revisions moving forward here over the next couple of months, and then what happens in South America as their crop season begins down there. Soybean stocks, we saw some downward adjustment there, a little bit of a surprise as well. September 1 soybean stocks are now projected at 523 million bushels. That's down 42% from a year ago. And the year-over-year decline there is largely reflecting a lower 2019 crop, and then only a slightly lower soybean use for the old crop marketing year. September 1 stocks for soybeans came in 50 million bushels below trade expectations. And similarly, kind of a decline from what the USDA was projecting in their WASDE for old crop carryover at 575 million bushels. So both corn and soybeans came in well below trade expectations. Based on the change in stocks from June 1 to September 1, soybean disappearance for that summer quarter totaled 858 million bushels, down 2% from that same period in 2018-19. Soybean prices have been moving higher, against the normal seasonal pattern for prices. Typically, you get into late August, September, seasonal pressure tends to weigh on prices. Instead, this year we've seen a pretty big price move higher. A lot of this driven by strong demand out of China for soybeans, and then a little bit of an expectation for maybe some downward adjustments in the U.S. Yield and production. So you can see that prices pushed earlier in September all the way up to a contract high at 1046, and then more recently pulled back and found some support at 985, and then we saw prices move up pretty sharply in response to this report again. From the lower than expected stock. So looks like November soybean futures are set to at least maybe challenge that contract high at 1046, and then I think we'll have to see what happens with the production estimates and then again weather in South America. So production cuts, are there going to be further revisions down to the U.S. Yield and production for corn and beans? So that'll play into how whether we get some follow through to the upside out of prices or not. 2021 corn ending stocks are already projected well below where they were just a couple of months ago. So just plugging in this new ending stocks or beginning stocks for the new marketing year and some recent revisions down in the yield. We're already seeing that ending stocks projection tighten, and with any further downward adjustments, we could see the carryover on new crop corn wind up something closer to 2 billion than 2.7 or 2.8 billion, which is what they were projecting just a couple of months ago. Similarly for soybean ending stocks, they're also set to tighten in 2021. With this downward adjustment in the old crop ending stocks and beginning stocks for the new marketing year, looking at carryover on beans, even without an adjustment on the new crop production, probably down close to 400 million bushel carryover for the new crop marketing year. So also expect USDA to raise the feed and residual use for corn for last year and into the new crop marketing year. And then China's been on a pretty aggressive buying program for corn and soybeans, particularly corn. A little bit of a surprise there, I guess, because they account for about half of the total commitments that we have on the books now for corn export sales. Looking a little further ahead into South America production, we have La Nina unfolding down in South America, which tends to be indicate a little dryness potentially for Argentina and southern Brazil. So we'll have to see how that unfolds, and that could have impact, of course, on prices as well. That's all we have. Thanks for watching.